Hi friends, in this video we are going to deal with some of the questions related to the leverages, calculation of leverages. We already discussed about the classification of leverages and the equation and how can you improve each of these leverages in a detailed video. Please check it before going to this video. So in this First of all, we should we can check the equations related to each and every leverages. Financial leverage can be calculated by EBIT divided by EBIT minus I. I means interest on debt. So you will get EBT, earning before tax. This is earning before interest and tax. Okay, by deducting it will be earning before tax. And degree of financial leverage can be calculated by the percentage change in EPS divided by the percentage change in EBIT, earning before interest and tax. EBIT is also known as operating profit. And operating leverage can be calculated by contribution divided by EBIT. And degree of operating leverage is equal to percentage change in EBIT divided by percentage change in sales. Okay. And the third one, that is combined leverage. You can multiply financial leverage and operating leverage and you will get combined leverage. Okay, by multiplying both these leverages. And the degree also, you can multiply the degree of both this, you will get degree of combined leverage. Okay. So moving to question number 1, calculate operating, financial and combined leverage. So you have the details of interest, sales, variable cost and fixed cost, and you have to calculate each of the leverages. Okay. So how can you calculate operating leverage? Operating leverage is equal to contribution by EBIT. So moving back to question, contribution is equal to sales minus variable cost. Okay. So here sales is 1 lakh and variable cost is 50,000. So sales minus variable cost will give you contribution, that is 1 lakh minus 50,000, which is 50,000. And EBIT means you have to, from contribution you have to deduct fixed cost. Okay, that is EBIT is sales minus variable cost minus fixed cost. That means from contribution you have to, by deducting sales with variable cost we will get contribution. So again you have to deduct fixed cost to get EBIT. So sales minus variable cost minus fixed cost, that is 1 lakh minus 50,000 minus 30,000, that is 20,000. Okay. So 50,000 by 20,000, that is contribution by EBIT, will give you operating leverage, that is 2.5. Okay. So now coming to financial leverage, EBIT divided by EBT. So EBIT we have EBIT, that is 20,000. 20,000 divided by EBT means EBIT minus interest. Okay. So interest is already given in your question. You can say interest is 10,000. So you can deduct 10,000 from EBIT, that is earning before tax. Okay. So 20,000 minus 10,000, this will be 10,000. So 20,000 divided by 10,000, you will get the answer as 2, that is financial leverage. So we already have financial leverage and operating leverage. Now by multiplying these two, you will get combined leverage, that is 2.5 into 2 will gives 5. Okay. So this is the combined leverage. Clear? So we can check another question. AB Limited is considering the installation of a new project costing 80 lakh. Expected sales revenue from the project is 90 lakh annually. Its variable cost is 60% of sales. 60% of sales means sales we have 90 lakh. So 60% of this 90 lakh. Okay. Then expected annual fixed cost other than interest. So interest is not included in this fixed cost. So total fixed cost, the fixed cost is 10 lakh and corporate tax rate is given as 30%. The company arranged funds through issuing 4 lakh equity shares. So there are 4 lakh equity shares of rupees 10 each and 12% debentures of rupees 40 lakh. Okay. So this is the interest. You have to calculate interest of this 40 lakh, that is 40 lakh into 12%. Okay. So you have to calculate operating leverage, financial leverage, combined leverage and EPS, earning per share. So for this, first of all we can do the all calculation related to this particular for calculating our leverages. So sales is given as 90 lakh. So by deducting variable cost from sales, variable cost is 54 lakh, that is 60% of sales, 60% of 90 lakh. You will get contribution as 36 lakh and again by deducting fixed cost rupees 10 lakh, you will get EBIT. Okay, that is operating profit 26 lakh. Okay. Now you have to deduct interest from EBIT, that is 40 lakh into 12%. 40 lakh is debenture and the rate of interest is 12%. You will get 4 lakh 80,000. So earning before tax, that is EBT, is 21 lakh 20,000. And again we have tax, that is at 30%. So you have to take 30% of tax, that is 6 lakh 36,000. So 30% of this amount. Okay. So you will get 6 lakh 36,000 and the amount earning after tax is 14 lakh 84,000. So this amount is actually available for the equity shareholders. Okay. Clear? So we have all this EBIT, contribution, EBT, EAT, that is earning after tax, for calculating various leverages. Okay. So first one is to calculate operating leverage. We know that operating leverage is equal to contribution by EBIT. So here we have contribution 36 lakh and EBIT 26 lakh. So 36 lakh divided by 26 lakh, that is 1.385. Okay. So now coming to financial leverage, EBIT by EBT. So EBIT is already given as 26 lakh and EBT, here you can see it is 21 lakh 20,000. So here you will get 1.226 as financial leverage. So now you have operating leverage and financial leverage. So you can find combined leverage. Okay. So combined leverage is equal to operating leverage into financial leverage, that is 1.385 into 1.226. You will get 1.70. Okay, and the last part of this question is to find out EPS, earning per share. Earning per share is equal to the amount available for equity shareholders divided by number of equity shares. Okay, so the amount available, that is earnings after tax, is 14 lakh 84,000. Now the question is the number of equity shares. So moving back to the question, you can see that there are 4 lakh equity shares. So the number of equity share is 4 lakh. So by dividing 14 lakh 84,000 divided by 4 lakh, you will get 3.71. This is EPS, earning per share. Clear? So moving to another question. Here we have given sales rupees 10 lakh, variable cost 4 lakh and fixed cost again 4 lakh. Capital employed of company is rupees 8 lakh with the debt equity ratio 1:2. Debt carries 10% of interest. Find out the financial leverage. So here see this statement, that is capital employed of the company is 8 lakh. So the total capital employed is 8 lakh and with the debt equity 1:1. That means debt is to equity. That is a 1:1 ratio. Debt equity ratio means debt by equity. That is 1:1, isn't it? So this 8 lakh means 4 lakh is debt and 4 lakh is equity. Okay, clear? Because this 8 lakh is the complete capital employed of the company. So this capital employed from the part of debt and equity. So this is in the ratio 1:1. So that is 8 lakh means 4 lakh debt, 4 lakh equity. So you have to calculate the interest of this debt amount, that is 4 lakh. Okay, so you have to calculate the interest of debt, that is for 4 lakh. Clear? So your question is to find financial leverage. So how can you find financial leverage? Its equation goes like this: EBIT divided by EBT. And EBIT is sales minus variable cost minus fixed cost. Sales is 10 lakh. Sales is 10 lakh. Variable cost is 4 lakh. Fixed cost is also 4 lakh. So 10 minus 4 minus 4, that is 10 lakh minus 4 lakh minus 4 lakh, you will get 2 lakh. Okay. And EBT, you have to deduct interest from EBIT. Okay. So the interest is for 4 lakh that we already discussed. So 2 lakh minus 4 lakh into 10%. So you will get 1,60,000 as EBT. Now you have to divide 2 lakh divided by 1,60,000. You will get 1.25. That is option D. Clear? The next question, degree of operating leverage is given as 4 and financial leverage is 3. If sales increased by 5%, then earning before interest and tax will rise by. Okay, so here we have degree of operating leverage and financial leverage is there. Now the question is, sales got increased by 5%. So how much increase will be there for earning before interest and tax? That means EBIT. Okay, so we have 5%, 20%, 15%, 10%. Anyway, degree of operating leverage can be calculated by the percentage change in EBIT divided by percentage change in sales. Okay, so here we have the degree of operating leverage as 4. Okay, so 4 is equal to percentage change in EBIT that you have to find divided by percentage change in sales is 5%. So divide by 5%. So you can calculate percentage change in EBIT is equal to 4 into 5%, that is 20%. Okay. So option B. Okay. So answer B. So in this video we have discussed about various methods, or how can you do different problems relating to the financial leverage. These problems, and when you have deal with the particular equations, it will be very simple to calculate, solve these types of questions. So at least you have to make a bit understand of these areas, okay, these types of problems. So I hope this video will help you for your preparation. Keep studying. Thank you.